debate this one. Everybody owns Apple. But Jim, you own it as well. Small position for you.
Yeah, and my take on this is imagine that we're at this time next year and Apple's up 7-8% in line with the market, which is frankly what I think will happen. That will seem like a major disappointment, but it'll be a market level return. And that's what I see happening next year, because I think growth is hard to come by in Apple, at least at the rates that we're accustomed to. I don't know anyone in the United States or the developed world, really, who owns an Android phone. I literally know no one. I mean, that market is pretty saturated. Sure, you could look at China and say, well, you know, there's switching availability. There's some capacity for people to switch there. But China and the U.S. are locked in a battle, and, you know, Apple's on the front line of that. So I don't think that's the thesis. And, yes, services, great business. I just don't think that's going to have enough growth to really justify the multiple going forward. That may beg the question of why be in it at all. But, look, it's a huge part of the market. And as the market goes up, it will go up with it. But I am underweight Apple, meaningfully so.
All right, so Kevin, you recently sold Apple. Are you concerned about the same things that Jim's concerned about going forth and possibly growth not being as big as it could be?
Yeah, we love the stock, but everything's predicated on how much money do they make and what multiple do you attach to it. And I think in the 30s, it doesn't justify that multiple. So we're out of Apple in its entirety. This is probably the 9th time over the past 11 years that we've sold out of it. And of course, it hasn't come down. It just keeps going up every day. But I think we were dismissing some of the China news as far as their government not wanting Apple to be used by their employees. And the more we looked at it, it seems like there's about 1 billion people that work for the Chinese government or some form of agency. So maybe that does have an impact. And then we also took a look at the valuation. And based on the multiple metrics, we think the stock's trading about 30% more from an expense level than it was back before the pandemic in 2019 and 20. So for us, it's not a question of do we like Apple or not. You're not seeing earnings growth in the fourth quarter. You haven't seen it for 4 previous quarters. We want accelerating growth. So for us, we're going to sit on the sidelines for a little bit with Apple.
Josh, what's your take? One part of what Steve Kovach was talking about is device sales. Looking at IDC, they put out a report last year. They expect PC sales to reaccelerate in 2024. What's your take on Apple and its prospects for growth?
Well, if PC sales do reaccelerate, it would definitely help, because last year they were down substantially. And I think that is the most cyclical part of Apple's business. They really can't avoid being in that business and not having that cyclicality. So in 2020 and 2021, pretty much everyone in the world who was stuck home working from home bought a desktop device or a laptop. And then in 22, they didn't need to. In 23, they didn't need to. But those devices, you know, there's wear and tear, time goes by, and then all of a sudden, those customers, whether they're businesses or governments or regular households, they come back to the store and they need the newer device. So that's the cyclical part. The rest of Apple's business is not cyclical at all. And it's not, look, it's a tougher stock here. I agree with what Kevin said and with what Jim said. It's 27 times forward earnings. The earnings have grown about 63% in the last 5 years, but the market cap has tripled. So without a doubt, this is one of the more expensive times to be buying new shares of Apple, but I just don't want to be out of the stock for that reason. They have bought back 1/5 of all of their shares outstanding, 20% of all of their shares outstanding since 2018. And again, the market cap has still tripled, even with buying all those shares in and decreasing the available float. But again, it's $166 billion in cash. They can continue to do those buybacks unabated. And they're going to drop the VR product this year. It is the first launch of new hardware, a whole new category, in a really long time. And you don't have to think that it's a mass market product to be excited about it. And I want to remind, Kovach knows this, but I want to say it anyway. When the phone came out, nobody thought that was mass market. Phone industry people were laughing so hard they almost couldn't hear the announcement. Ballmer said no one would ever buy one. And the guy from Nokia said whatever he said in whatever language that is. And look at us now, $200 billion a year in annual sales. So I don't believe that story that they're going to launch a $3,000 product and we're all going to yawn at it because it's not mass market. That is just not the way this is going to play out.